Brexit is upon us, but what does that mean for the Fed? One market expert tells us what's next. Welcome to Trading Nation. I'm Susan Lee. Peter Schiff of Europe Pacific Capital joining us over the phone for a post-Brexit chit-chat. Good to have you, Peter. So why should Janet Yellen be happy about this vote?
Well, I think it's just what the doctor ordered as far as getting her out of jail free. You know, she's kind of boxed herself into a corner because she doesn't want to admit how weak the U.S. economy is, but then she doesn't want to actually raise rates, but she keeps talking about the fact that raising rates is appropriate because the economy is strong, but the reason she can't raise rates is because she knows the economy is weak, and so this gives her the perfect excuse. Now she can blame her failure to raise rates on Brexit and all of the turmoil that has resulted. In fact, she can even use this as an excuse to cut rates back to zero and launch QE4. Now, that's what she was going to do anyway, but now she doesn't have to admit that it's the U.S. economy that's the problem. She can blame it on Brexit.
Well, the last time they cut rates and launched QE was the last crisis. Do you think this is the start of another one?
No, I mean, this is maybe a man-made crisis. I mean, first of all, everybody was warning the Brits not to vote for this because they were drumming up all these horrible things that would happen if they voted for the Brexit. I mean, obviously, if we hadn't built up all this hysteria, I don't think we'd have this kind of reaction in the market. It's kind of like a self-fulfilling prophecy now because we talk about how much all these bad things that would happen, and so now the bad things are happening. But, you know, this is not this huge event. I mean, if anything, I think it's a repudiation of big government in Europe, and hopefully this will end up being a positive for the British if this is a repudiation of big government in general, not just the regulations that were coming out of Brussels, but maybe the regulations that were coming out of the UK itself, and maybe this could be a springboard for less government in the UK, fewer regulations, less government spending, lower taxes. They talk about making Britain more like Switzerland. Well, that would be a great thing. You know, Switzerland is not in the EU, and they have the strongest economy in Europe. So you don't have to be in the EU to have a strong economy. In fact, a lot of the countries in Europe are struggling because of the burden of regulations coming out of Brussels.
So what are you saying, Peter, that the UK is just the first and there will be other countries wanting to leave?
Well, I mean, that's one of the reasons they want to probably make it appear so bad for Britain. You know, they're punishing the pound, and I think it's ironic that I hear a lot of people, you know, on CNBC talking about how, the weak pound is somehow going to be a good thing for Britain. It's going to stimulate the economy. It's not. I think the weak pound is a symptom of the fact that people think that this is so bad for the UK. But if the UK can, you know, embrace a lower regulatory environment internally, too. If they can have more free market reforms, then this is probably a good buying opportunity for the pound, but we'll see what happens. I mean,
you know, Peter, some people say that the weak pound is the reason why the FTSE was down less than the Euro stocks, seeing declines of 7%, the worst sell-off that they've seen since 2008.
Yeah, well, first of all, when I look at the British market, I don't look at it in terms of the pound, right? I like to price it, let's say, in terms of gold. And in terms of gold, the UK market is down the most, right? Because, even though the Japanese market was a big decliner in real terms, the Japanese market didn't fall that much because the yen was very strong. But if you want to look at everything in terms of gold, then, you know, you lost a lot more gold being invested in British stocks than you did in pretty much any other market in the world, even though the nominal pound price of the decline in Britain was less.
Peter, it's always a pleasure. Thank you so much. And thank you so much for watching Trading Nation. I'm Susan Lee.